Good evening, everyone. Welcome to Crypto Pulse Weekly. I'm just going to wait for about a minute to allow all the guys on Instagram to join, and then we'll get started. Good evening once again. Welcome to Crypto Pulse Weekly, your weekly review of the happenings on the crypto markets and insights into how to navigate the crypto world. Thank you for joining, and let's proceed as usual. Today we'll go through our agenda and crypto paper, crypto vital signs, and then we'll take the question and answers. Hopefully it's going to be a rather short one today, because even though we do have some, spectacular newsworthy item, I think the market, the general market direction is pretty much as expected. So let's get started. In terms of market review, on a fundamental level for cryptocurrencies, we'll see that Bitcoin has stayed within the 50s range during this week. It's dipped down to 53, 54, but it has largely stayed within range in the 50s in the last 1 week. It started rallying at the beginning of last week. I think that was Friday, rallied up to 57, then dipped back, and now it's currently sitting at 58K. However, despite the fact that we have this growth or this price increase in Bitcoin, it's of significant note that the Bitcoin dominance as a fraction of the overall cryptocurrency market cap has been decreasing consistently, like we've had in the previous weeks and the previous month. So while we were sitting at around 50% last week, or budging around 49, we've practically dropped lower this week. And this suggests, generally speaking, that we're into alt season, meaning the money flow is sitting within the altcoins environment for now. On the regulation part, two items that stuck out to me was the Turkish government wanting the Turkish exchanges to report transaction over $1,200. I mean, for any serious exchange, that's a lot of transaction, because imagine somebody buying Dogecoin at 200, and then Dogecoin, he bought Dogecoin at $200, and then Dogecoin had done multiples of itself. I'm not sure how they plan to implement that. I'm not sure even if the exchange themselves will be able to defend that. I think what will happen is most of the exchanges will change their operating offices from Turkey and go offshore and still keep their clientele. I think that's what's going to happen, because it doesn't make sense to try to track transactions over 1,200. 1,200 is not even up to, it's barely up to 1/4 of ETH. 1,200 is just like 2 BNB. So really, I think it's a far reach. I understand the context for Turkey. Turkey being a government-controlled state, almost like not almost like North Korea, but not in the same fashion. But this is blockchain technology. I think it's going to be difficult for them. And I think they're going to invite a lot of DeFi innovations into that space. And mostly people will just generally move their funds and their values and wealth into the decentralized finance space. Moving on from that, another headline in the news this week was the New York Attorney General suing a cryptocurrency company called CoinSeed, saying that they have complaints from investors about them losing money. And because of that, they want them to cease operations. So what I think happened was they had sued them earlier on, and then those guys moved out of New York State. If you're familiar with the US, you know that New York State is very notorious with litigation against companies generally, not just crypto companies, and that's because New York is like the financial capital in a way of the United States. So many of the legislations that are in place there are not in other places in the United States. So whilst you can say that many crypto companies will find it difficult, if not impossible, to operate in New York, Wyoming, on the other hand, is like the nation's hub for cryptocurrency startup right now. So it's a bit of a dichotomy within the United States, and because of that, almost all cryptocurrency exchanges I know, either they have a separate US platform or they're not operating in the US at all. Or if you're operating in the US, then they go to the extra extent of delisting some coins so that you can't have access to those coins within the New York State. Moving on, in terms of sentiment, we still generally we're more bullish now than we were last week, and I think we have all the confirmations we need that we're in full altcoin season. What do I mean? Apart from Dogecoin that's been blowing up and pumping all the while, you would observe that if you hold altcoins, you see many of those altcoins, especially if you've held them for more than 2 months now, most of them are starting to grow. Even the ones that did not gain before are now gaining price. So it's definitely altcoin season. Like I said last week, I expect this to be part of June before Bitcoin takes over or the market takes a correction, whichever comes first. So that's where we are in terms of general fundamentals. There was this news that came up today as well, and that was carried on the WhatsApp group about the CFO of Bridgewater hedge fund moving to NYDG. NYDIG is a custodial cryptocurrency custody company. So they help corporates to custody their Bitcoin. That's their job description. That's what they do. And they work with banks, they work with hedge funds, they work with all sorts of people to custody their funds. And of course, it did make the news that the CFO of the biggest hedge fund in the world, which is Bridgewater, is jumping ship to a crypto company. Yeah, I mean, if I was a CFO, I would like to have that kind of exposure as well, because as a CFO of the biggest hedge fund company, there's really nothing else you want to hear or see in core finance that you wouldn't have come across. So I think this is a good jump for him. It's a vote of confidence, generally speaking, for the cryptocurrency community, and I think it's a sign of things to come, if I may say that. So in the next news, we have our dear friends at Goldman Sachs. If you remember, the last bull run came to an end when the CME futures opened, and then Goldman Sachs was, after bashing Bitcoin, they were planning on going to set up their trading desk for cryptocurrencies. Of course, when Bitcoin crashed from the 2017 highs, they withdrew that decision, and they only started to move it again, I think, at the beginning of this year. So now that trading desk is fully operative. So I guess very soon you will see them advertising their own exchanges. The importance of this news is that adoption is here, whether we like it or not. And People have asked me, what do you think about this bull run? Are we going to have a bear market? It doesn't really matter whether or not we have a bear market. It's inevitable that we're going to have a bear market, but it doesn't really matter because at the end of the day, once these institutions take a foothold of the cryptocurrency environment, they will be the ones pushing the adoption to their customers. And I mean, we still have about 250 trillion floating around looking for a home, and we're still at 2 trillion. So early days, if you ask me, we're still in the very, very early days, generally speaking. So moving on from Goldman Sachs, I saw this news about the new chairman of the Security and Exchange Commission of the US. I mean, apparently he's a crypto-friendly guy, pushing the legislation to protect crypto investors. I've not seen the details of his proposals, but what I think will happen, because I think many of those guys themselves, they already hold cryptos. Many of those congressmen and government officials, they already hold cryptos. So I think what will happen is they'll be looking for a way to push crypto into an asset class that sort of maybe sits in the same asset class like gold or arts or antiquities or anything like that. I'm sure that's what they'll be looking at. But it's important to note that there's a lot of regulatory framework. There's a lot of regulatory efforts that is going on within these countries. So for instance, I know that the Bank of Japan, they've done the first test with the central bank digital currency. In fact, they've done the second one actually in preparation for 2022. So I wouldn't be surprised if Bank of Japan is the second country to roll it out after China. I did mention last year, May, that China was rolling out the digital currency, and they were indeed encouraging government workers to get paid in digital currencies then. And then they did what you can call an airdrop. It was like a lottery airdrop. If you signed up with your phone and downloaded the wallets, you can get money from the government for free. So I think we'll see more of central bank digital currencies in the months and in the years to come. There was this news that happened earlier during the week about US Bank starting crypto services on a very large scale. And that's pretty much driven by the money flow between their customers and Coinbase. So basically what's happening is the banks are saying that there's a lot of money moving from their customers' account into Coinbase's accounts. And they're like, oh, it looks like Coinbase is going to eat our lunch. Well, I think Coinbase has already, maybe not Coinbase, but crypto has already eaten their lunch without them knowing. But this, I think, is just something for them to also try to position themselves so that they don't become totally obsolete. So what I think will happen is that, and I was having that discussion earlier in the week with someone. I don't think everybody's going to be down with the idea of your keys, your money. I think people will still want to follow, the traditional way of having somebody hold the money for them. So I think what will happen is banks will start providing layer 2 solutions like cryptocurrency exchanges, saying we'll create an extension of your bank account. We'll call it your digital wallet. You can keep your crypto there. So they'll basically create products like the cryptocurrency exchanges, and they will do the backend settlement on the blockchain. It's just the same way exchanges operate today. That's the way I think. That's the way I'm processing it in my mind. Now, whether that would take over the long period of time, and what I mean is whether the generations of people coming after us, or the younger generation, I don't even know whose generation they call them, Generation Z or something, whether they will be interested in such things or they will just prefer to have their own wallets, it's anybody's guess right now, because it seems like, okay, well, they might still be able to hold for another 10 years or 20 years with the older generation still following the traditional way of doing things. But we don't know what the evolution of people's psychology will be in regards to money and custody of it. But for now, I think it's a good thing. I think it's a good thing generally for this for the cryptocurrency community because it means that many banks will have to purchase and hold crypto themselves. They will have to have wallets. Definitely, that increases the size of the networks, that increases the security. They will start to make investments as well because that means they're also investing value on the blockchain. So I think it's a good one. I think on the long run, it serves a good purpose for cryptocurrencies for Bitcoin as well. In the news, Grayscale posted their Q1 results. They posted a loss. I mean, it made the news, but initially I was like, okay, why is this making the news? But when I went through what they did, I'm like, yeah, if I was Grayscale, why would I want to post the profit? Because they had massive profit last year. They're still going to pay very heavy taxes on those massive profits because of the huge success of the Grayscale Trust and how Bitcoin has moved in the last 1 year. So what they've done is instead of recognizing those profits, they've just basically moved those profits into purchases of more Bitcoin. So while their holding has increased 8% over the year between December and now, it has increased 17% between the beginning of the year and now. So what it tells me is that even though the the P&L is reading a loss, but I think they've moved the money to the balance sheet in the form of Bitcoins, which I think, generally speaking, is a smart thing to do for any company at all, not just because they are a Bitcoin trust, but for any company at all. I think it makes sense. But if this trend continues, two things that I think will happen. One is that governments will have less tax to collect from companies generally because once they move Bitcoins to their balance sheet, it's retained earning. It keeps rolling over. If you understand, if you're an accountant or you understand accounting, it keeps rolling over year on year as an asset. However, if they're posting losses and they are moving more Bitcoins into the balance sheet, then it means, or they're posting lower and lower profits, it means that they're accumulating value. So the company will gain intrinsic value because of the exposure to Bitcoin, but then they won't pay governments so much. And I think that's where the problem is going to start because suddenly the government will realize that we're not getting enough money from these guys. And then they will talk to the accounting standards people to create another accounting standard. But it will be interesting how that pans out. I'm sure that the accounting standards guy for both the United Kingdom and the US are already looking at this and wondering, how do we get our hands into this blockchain accounting? Anyways, thumbs up for Grayscale. I think they've done very well in the last 1 year, and the Q1 loss is really a blip in the scheme of things. Moving on. Last week I talked about this transaction cost, but what I didn't realize was that 1.5 billion P2P transaction from Nigeria on Paxful is 25% of their global transaction flow. I don't know what you guys think, but that's really, really very huge. If a global company that does P2P transaction has 25% of its flow coming from a single country, it's saying something. Saying something. I'm not going to say more than that. It's saying something to me. It may be, it can go either way. It can be sinister and it can be a very good thing, but it's saying something that 25% of the global volume for Paxful is coming out of Nigeria. That's very significant, significantly huge. Yeah, I just remember that I talked about this last week for Bitcoin. And just to refer back to it, that when we did crash 2 weeks ago, the on-chain metrics really did suggest that we were just in a correction, and that was a local top. I think that's been proven right now. I think it's a local top, and people ask me, do you think Bitcoin is going to go to 500K? I think we might make a run for 400 or something. Maybe try 490 or 580 or 480 or 520. It'll be a blow off target, like to just hit that target and start crashing down. That's the impression I have. But whether it will exceed 100,000, I think it's a given that Bitcoin is going to exceed 100,000 this year. I know many people have said, no, what do you mean? Why do you say so? And all that. it's a given that Bitcoin is going to exceed that. And why do I say that? Apart from all these banks lining up, so there are about 300,000 banks in the US, across the US. I can't remember. Some very crazy numbers. When all of them start custodying crypto, that is unprecedented demand. I mean, outside all the institutional demand, that alone can almost crash the network in terms of, if they all start making the demand at the same time. So I think 400 is small. And like I said, somewhere at the back of my mind, honestly, I think there's a super cycle coming our way in terms of Bitcoin cycle. So if you've been following this channel, you understand that, or if you follow Bitcoin, you understand that Bitcoin, peaks every 3 to 4 years based on the Bitcoin halving. But there is this notion that because of the changing dynamics in the supply and the demand of Bitcoin, that we might not see the kind of bear market that we witnessed in the first two cycles for Bitcoin, which is 2013 and 2017, that we might actually have, a persistent bull market, if you will, before a final crash in the next bull run. Whilst it seems far-fetched, while it seems very far-fetched right now, when you look at the fundamentals, it doesn't seem so far-fetched, because if you think about it, that you can only ever have 21 million Bitcoins. Out of those 21 million Bitcoins, almost 19 million of them is already in circulation. Out of the ones in circulation, maybe like 4 or 5 million are lost forever because the owner has died or somebody has lost their keys, or So the remaining 15 million plus, more than 25% or more than 50% of it is sitting between the whales, which are the very large holders, and the exchanges. So if anybody is buying afresh, they're only probably just buying what is coming from the miners. Right now, we are producing about 900 and something Bitcoins every day, which of course is being bought by people like PayPal and Grayscale, usually almost on a weekly basis. So if you take that into consideration, and you now take this news I just shared about the US banks having positioning to have exposure in Bitcoin and in cryptocurrencies, it means there's simply not enough supply to go around. And when that happens, and like Michael Saylor will proceed, that it just takes 10 billionaires to say, I'm going to put 1% of my assets in Bitcoin, and then that the Bitcoin price will blow through the roof. So when that happens, even though there's a crash, and inevitably, if Bitcoin gets to 100K, many people will sell off. We might have Bitcoin coming back to 60K or coming back to even 50. But at that point in time, best be sure that institutions, billionaires, family hedge funds, family trust will be loading on big time, because it's now clear to everybody that this is actually a better storage of value than gold, and that it might be time that we retire our gold to migrate to Bitcoin. So yeah, if you ask me, if you don't get to 500 this year, I think the market will at least try to make a run for it. But definitely we're going to exceed 100. And once we exceed 100, 200, 300 will be very easy. The same way, the week we exceeded 20K, we're almost going to 30K in the following week. So I expect that to happen again once Bitcoin starts to, rear its head up. But right now, kudos to Ethereum for hitting another all-time high. Somebody asked me during the week whether Ethereum was going to hit 5K this week. I'm like, oh, calm down. Ethereum doesn't move like that. And the reason I said that was Ethereum is already the most capitalized altcoin in the world. And like some news carried it, because of Ethereum's new all-time high, he actually made Vitalik the youngest billionaire this week, because Ethereum hit 4,000. But Ethereum is already like 400 million, and what am I saying? 400 billion, sorry. Ethereum is already like 400 billion. So for you to move the market cap from what it is now to to 5K, for you to move the price from 4K to 5K, then you expect that there's another 100 billion coming in. I don't think that that's going to happen within a week. Bearing in mind that many of the institutions are simultaneously positioning into other blue chip altcoins like, Cardano, Polkadot, Binance Chain, and many other, blue chips, what did I say, blue chip stock, blue chip cryptos like that, altcoins. So it's going to be very difficult for Ethereum to move that fast. I still believe Ethereum is probably going to 20K. If you study the price pattern and movements of Ethereum, it's behaving exactly like Bitcoin in 2019. So it's not impossible for Ethereum to peak out at 20K this year or at the peak of this current bull run. But I don't think it's going to do that rapidly. Even though, I mean, in fairness, in the last 6 weeks, the weekly chart has been positive. It's been growing since the last 6 weeks. So at some point, we're going to have a cool off. I think we're going to have a cool off at 4K. If it breaks 4K and stays above it, we'll have a cool off. If it doesn't break 4K, then we'll be sure to come back to maybe 3.5 for some correction, or 3K. So really, I think Ethereum still has a long way to go, but it's a game of patience. You can't, you can't force the market. You can only play the hand you're dealt. So really, Ethereum is doing well, and because of the upgrade in June, which is next month, it's sort of getting priced in. Like they say, buy the rumor, sell the news. Because everybody knows the upgrade is going to improve the functionality of Ethereum, so it begins to appreciate in value. Once that comes, we might take a dip. But yeah, Ethereum is a good buy. I mean, it's a good buy in the short term. It's a good buy in the medium term. It's like the internet of blockchain. But there's a better word to use. And because it's the pioneer altcoin, so to say, it has that first mover advantage. Now, there are other competitors that I've talked about in the course of this year on this platform, in this forum, like Polkadot, Cardano, and the likes. How those ones compete will depend on, how they're able to woo institutional investors this year. That's my take on that. But on my spotlight days, Solana, and I think I knew about Solana like the second month or the third month when it came out. And then it looked like, how do I say? It looked like one of those new projects. But apparently, they were also building an ecosystem and a platform like Cardano. But they've moved quite fast. They have this additional fancy functionality on their blockchain called proof of history, separate from proof of stake and proof of work. And I think they've had a number of projects built upon their blockchain. So it's giving them some traction. I mean, Solana started out at $2 something when we bought last year. I remember that I bought some and I sold. I mean, all the ones I sold at profit. I was just checking the price this week and I just saw Solana at $40. I was like, wow, 20x. So I think Solana will do well. I mean, it's done 20x already. Probably do another, 1 or 2x or 3x in the immediate future. It's currently correcting on the charts. I'll show that later, but it's important to know that it's a good ecosystem coin, just like Cardano, Polkadot, Binance Chain. I think it has some good potential if they maintain the team and they're able to sustain the current momentum. I think they might just get their head into something. So it's a coin to watch out for all the people who ask me for tokens to buy. It's quite expensive now. It's $40, but it's still a good project. In terms of our vital signs, crypto vital signs, the market cap has grown by about another additional 200 billion. But you can see Bitcoin is now sitting overall value lesser than altcoins. Altcoins at 1.3, Bitcoin is at 1 billion, 1 trillion. Sorry, we gained 400 billion over the last 1 week on the markets, and more than half of that money has gone into altcoins. So further confirms our hypothesis or our theory that altcoin season is full swing. So if you have altcoins, happy days until we see that correction, which I'm going to talk about in the chat shortly. So that's where we are. In terms of fear and greed sentiment, as I said, before, we're still in good stead because just last week we were in 51, and I was saying that it's very rare for you to see this gauge around this region. Usually it's either sitting to this extreme or sitting to the right. So that was a good time to enter the markets. Generally speaking, it's just telling me that Bitcoin is still rearing to head higher, but because the money flow is sitting with altcoins right now, most of those gains are not really showing up in the price of Bitcoin. In terms of where we are for the market psychology, I think we are here. I was going to put a small mountains at the top of this. I think we're here. We're beginning to get into the trio. Two things that will confirm that we're fully in the trio. If this trend continues, and I'll show it on the chart shortly, if the trend continues such that Bitcoin dominance keeps going down and altcoins keep going up, then we're going to get to some sort of euphoria with altcoins, because imagine seeing your altcoins that was 1,000 at the beginning of May becoming 10,000 at the end of the month. That's a lot of gains. That's the projected gains, really, to be honest. But everybody's still keeping our hands closed. I mean, our hands folded and watching out for what's going to happen. But generally speaking, if you follow the long-term wave pattern, as they say, of the market, it looks like that's what's supposed to happen. So if it plays according to pattern, then can expect a very, as they say, fantabulous May for most altcoin holders. So I'll go into the charts briefly. Let me see. Let me start with, yeah, so I wanted to start with, let me start with Solana. I just wanted to explain that Solana was sitting at, sorry, excuse me. The guys on Instagram, my camera flipped. Yeah. I was trying to position better for the guys now. Okay, so what did I do? Let me take that out. Yeah, so I was trying to say that I hope this thing is live though. It should be. Oh, sorry about that. Yeah, so this is Solana's daily chart for the last almost 10 months. So it started around yeah, way back. Yeah, it started around $2.80, sitting at 44 now. I'll be interested in buying Solana if it comes back to $30. I think it still has a long way to go, generally speaking, for a coin like this, especially when institutions get to know what it is really about. For Bitcoin, Bitcoin is sitting at 58. It's done like 4 dips now to 53, and it's been back, and it's not been able to. Okay, yeah, somebody said they wanted me to talk about Rari. Yeah, I'll talk about Rari. I was going to talk about Doge, but I'll talk about Rari later. So Bitcoin is trading in range. You can see it's sitting flat. I think if you check the 1 hour, it might be more representative. Yeah, so it's trading in range between 50, 60, and 53. I expect this to continue into the weekend. This weekend, I expect to see some changes for altcoins though. Let me put up the Rari charts for the guys asking for Rari. Yes, I did say you should buy Rari over the weekend. It's a very funny story with Rari. I learned about Rari last year, and I remember Mr. AY telling me to buy Rari, and I was thinking this Rari is too expensive. What the heck? It was probably $2 or something there. It's not a good chart. Let me go for the daily. Yeah, it was probably $2. Yeah, even his BTC has not fully charted it. It was probably, yeah, they probably started selling. Let me look for another. Oh, they're the only one that has it, but they're the only one reporting it. So it was selling on decentralized exchanges when I first learned about it. And I read about them, but just like, okay, well, one of those DeFi projects. But what's happening now is they're coming to mainstream, and they're increasingly getting popular. At the peak I think that was in February, it sold for as high as $40. And the reason I told people to buy was that because I was also buying. The day I told people to buy, I think I bought 10 that day myself because I felt the price was coming down. I think it's in a very good buy region now because it's probably going to get listed on another big exchange in the coming days or in the coming weeks. And the upside target is as high as 200 to 1,000 to be very conservative. So I think it's a good buy. There's not much to discuss in terms of what's on the charts, but fundamentally speaking, I think it's a very, very strong. It has a very strong fundamental as a coin. Back to our discussion on crypto drip. Today, I said I was going to talk about Dogecoin, the most popular the most popular useless coin in the world. Well, it's not useless now, at least because it's now a speculative. It's a proper speculative asset. So to touch about Dogecoin, I know Dogecoin has been a lot of people rich this year, so you have to give respect to that. But we need to start from the very beginning. So what happened at the beginning when Bitcoin was created? Some guys felt, it would be fun to have a coin that was the exact opposite of Bitcoin in terms of supply, which was, making the coin essentially inflationary. Inflationary means it keeps going up and never comes down. So they said, okay, we're going to make Dogecoin. And they made Dogecoin. Well, Dogecoin is sitting on number 4 now. Over and above even Theta and XRP and Cardano. Anyways, so here is Dogecoin for you. And when they made Dogecoin, of course, because it was cheap and was next to nothing, people were accumulating, or natural accumulators or holders generally accumulated a lot of it. But what made Dogecoin popular, as I said in the reel on Instagram, was that Elon Musk tweeted about it that, Elon Musk has this funny saying that fate loves irony. That it might be the what you consider the worthless things that becomes the most useful. So because of that, and because prior to Elon Musk mentioning Dogecoin, for the most part, in the all season last year, you have this new generation of TikTokers, or what I call TikTok stars, accumulating Dogecoin and then urging on their followers to buy Dogecoin. And of course, a lot of people bought Dogecoin just because on the back of saying, imagine if Dogecoin could be a million, well, you will be a millionaire, those kind of stuff. That I mean, Dogecoin was really, really cheap then. I'm going to show you something now. Dogecoin was really, really cheap then. Of course, I wasn't interested in those kind of things because I only trade with money I can, or only buy things with money I can afford not to lose, not with money I cannot, or with money I cannot afford to lose, not money I can afford to lose. So I never paid interest to any of those things. So you see, Dogecoin was sitting at around 0.002. What's that? That's yeah, that's like 20% of a cent. For the most part, for the most of last year, that was around the regular value of Dogecoin. So it really started gaining when Elon Musk mentioned it in February. You can see this is February 2021. That was when it started taking traction. And because Musk mentioned it, those guys sort of got validation and started shilling, as they say in crypto, they started shilling it, meaning they started making more noise about it. And from then you see Dogecoin go from literally 2 cents to 65 cents. That's 52 cents. That's amazing. Like, That's 32x for anybody who had it before February. But what I wanted to say was, while it's a very sweet speculative asset, it makes a lot of money for everybody. Well, not everybody. It makes a lot of money for the money makers and the market makers and the large holders. Why? Because if people are curious about something that is popular, it's going to drive their interest and they're going to want to see what it is and maybe partake of it. Now, by partaking of it, meaning getting on the exchange and buying, the exchanges are going to make money because the exchanges will collect their commission when you buy and when you sell. So because of that, the exchanges are happy to, shore up the popularity themselves by publishing adverts saying, Dogecoin makes 628% in a month. Of course, as a new investor thinking about crypto, you're like, wow, this is mad. You will naturally want to get in. But in getting in, it's important to know where you are in context. As I always said, I always like to put things in context so that when you know where you are, you know how to hold yourself. And you can think about this analogy. If somebody were to blindfold you and then take you to one of those very nasty bridges that they have in China that hang across two mountain tops, like 6,500 feet below above sea level, and there is nothing under you except the valley. And then they open up, if they left you there and they were talking to you, you probably talk to them and they let's say, okay, hold the rail. And you hold the rail, you probably talk to them normally, just feel like, okay, we're in a windy environment. But if all of a sudden they open your eyes and you look at where you are relative to the ground, then depending on how scared of height you are, your heart is either going to shake or it's going to shut down. So what I'm saying is, you need to know where you are in the market. And that's why I brought this chart up. So this is a 3-month chart starting from February when Dogecoin was selling for 7 cents. After all that stuff, Dogecoin started going up. So right now we are 62 cents. Bear in mind that Dogecoin already has a market cap of 81 billion. And the total supply is infinity, meaning there is no end to the amount of Dogecoin that will be created. There is really no end. It will keep being created. Now, if you bear in mind that this was created as fun and it has now become mainstream because of the popularity it has gained from Elon Musk, the TikTok guys, and from the exchanges, then it begs the question, when is the bubble going to end? So if you're looking for a cryptocurrency bubble, this is the cryptocurrency bubble. And my real fear is that Dogecoin crashes one day, maybe when Bitcoin price is falling, and it crashes down to 20 cents. And then people say, cryptocurrency is scam, is a bubble, and they say all sorts of nasty things without knowing what they were getting themselves into or why they were getting themselves into it. So, like I said I think it was last week on one of the Instagram reels, only put money you can afford to lose in Dogecoin, because if the price crashes and it goes to 0.001, then you should be able to hold the bags, say maybe the price will come up again, or you should not be afraid to sell at a loss or leave it. If you don't mind losing the money, it means you can leave it if the price crashes, and if the price gains back, then you make your profits. Now, I'm not trying to dissuade you or convince you not to buy Dogecoin, because I bought Dogecoin in February. I think I made like 80%. I bought like $200 or 200 pounds. I made 80% back. Just, play money. And I've exited the markets and left it there. But what you're seeing here is that you've seen a peak, which was 68 cents. I think there's going to be another peak. Now, if that other peak doesn't exceed 68 cents, then we're going to have a dip. I don't know how much that dip is, but judging by this dip that we have here, and I had that chart. Let me show you on the chart. I just wanted to show you some technical realities. Judging by that dip, it means that if you have, where is it? Yeah. So judging by the dip we had here, which was from 49 to 15 cents, 65%. So what I was showing you on the other charts is 65% drop between 19th of April and 23rd of April. So now you can see we're at another tip. We're close to another tip at 62. If we don't breach 68, what I'm saying is expect another 65% drop from that. So if we take 65% drop from here, expect that we'll come back to 20 cents. So if you want to profit from Dogecoin, then you have to treat it like a speculative asset. What do I mean? You have to treat it like you're trading Forex, you're day trading stock. Never go in when the price is rising. Never. Because it means you're chasing the price and you're going to get burnt. Rather, wait for the market to come to you. Like one of my mentors says, let the game come to you. You know, if you are chasing an antelope in the forest, you never catch it because it will keep running. But if you wait for it to make a round circle and, you know, wait at the corner where you know it's going to come back or set a trap, the game will come to you. So what am I saying? I'm not saying don't buy Dogecoin. What I'm saying is if you're going to buy Dogecoin, you have to treat it purely as a speculative asset. Otherwise, you might be holding the bags for a very long time. I think I rest my case on Dogecoin for tonight, and I'll start taking questions. Yeah, ask. Yeah, if you have questions, please unmute yourself. And for the person that asked about Rari, if you had any other clarification, please to let me know as well. If you have questions on Instagram, just type your question on Instagram. I'll read it out and I'll answer it. Dr. Chan, did you have a question, sir?
No, I don't. Sorry. I just.
Okay, somebody asked, what do you think about coins like Bitcoin Diamond? Okay, let me just pull that up real quick. Bitcoin Diamond should be BT. I remember the ticker. I've seen it before. BCD, okay. Well, anything that has Bitcoin in it, you know, it's a clone of Bitcoin in a way, or is trying to gain appeal with the name of Bitcoin. So Bitcoin Diamond, what does that mean? Yeah, 189, maximum supply of 210 million. Currently selling at $7. This is the all-time high chart of this coin at $94. I don't want to say it's a scam coin, but it's a decoy, and it's a way to try to get people to buy into this. Exactly, the way to get people to buy into this particular asset for people to make money for themselves. So Bitcoin Diamond, hard fork of Bitcoin. A hard fork is a clone, essentially, of a particular blockchain network. A soft fork is usually like an upgrade of the network. But Bitcoin network is basically a clone that's riding on the popularity of Bitcoin. Given that Bitcoin Diamonds, I mean, has been around since 2017, as you see, would have gained some popularity, and you can see that in the price spikes during the 2017-2018 era. But this spike we see now is just on the back of Bitcoin. And it's to trick investors, especially new investors, into going for Bitcoin Diamond as opposed to, because I mean, it sounds great, Bitcoin Diamond. But really, it's as empty as all the shitcoins in the world, if I'm going to use that word, because it's not doing anything. It will have, I mean, it will have sold better in 2017 because not so many people were involved with crypto. Now there are more people involved with crypto. They're not going to get, I mean, it will be hard for you to get back to that 90 something dollar because now you have almost 10,000 crypto assets. So this is just a hard fork of Bitcoin with no specific use. Now I'm going to talk about, so you've asked about Ethereum Classic, you asked about Bitcoin Cash. Same thing with Bitcoin Cash. Bitcoin Cash is another, okay, I mean, let's take them one by one. So that Bitcoin Cash is another clone. Bitcoin Satoshi Vision is another clone. I mean, Bitcoin Satoshi Vision is like a cult. I'm not going to go into that. I'm not going to go into that one. But it's another clone. It's a hard fork of Bitcoin Satoshi Vision is a hard fork of the Bitcoin network. This Bitcoin Cash, however, I think it's an Ethereum-based token. Let me check. Yeah, no. Okay, it has its own chain. He has his own chain, but they are all Bitcoin clones that, you know, people are trying to, when Bitcoin came on board, people were trying to create their own version or create a better version of it, essentially. So they were forking it, F-O-R-K, meaning they were duplicating technology and renaming it. It's like I take your document or I take your paper, I rename it, I rename that file, I rename the headers, I rename the formatting, and I call it another name. Then I launch it. So they were doing that for many coins, actually. So the ones that were directly cloning Bitcoins are these ones that you see as Bitcoin Cash, Bitcoin Diamond, Bitcoin Satoshi Vision. And they will always rise and fall with the price of Bitcoin because newer investors will always think that these guys are just alternatives to Bitcoin. They're not alternatives to Bitcoin. They are close. I'll call them fraudsters, but I will shy from that because at least they try to clone it. So they put in some work. But they're clones of Bitcoin. And yeah. So exactly. I like this Bitcoin SV is a result of a lot of drama on the BTC blockchain. It split the network to creation of a new altcoin called Bitcoin Cash. So Bitcoin Cash was the first fork. Then off the back of Bitcoin Cash, you have Bitcoin SV. So really, this guy is on Bitcoin SV says that they are the original Bitcoin that stays true to the views of the founder of Bitcoin. So they have funny views like that. So one word, buy at your own risk, because the supply, as you can see, the supply is 10 million, but most of those supply is sitting with some guys who are like the major miners of this particular one. So I'm mastered on Bitcoin Class, same thing with Bitcoin Diamond, same thing with Bitcoin Satoshi Vision. Ethereum, yes, let's talk about Ethereum and Ethereum Classic. I'm coming to BTT, TY. Ethereum Classic and Ethereum. So Ethereum Classic was the original blockchain. So let me explain what happened here. So Ethereum Classic was the original Ethereum blockchain. However, at a particular block number, they suffered a hack. Now that hack resulted in the hackers, yes, if I didn't even know they reported it yet. So Ethereum Classic first set out to preserve this, Ethereum blockchain after a major hacking event led to the theft of 3.6 million Ethereum. Now, when that hack happened, there was a decision that was to be made by the creators of Ethereum, which is Vitalik and Gavin Wood. Gavin Wood is the creator of Polkadot, or Cardano. I keep mixing them up. He's the creator of one of them. So they had a decision to make that: do they roll back the network database on all the nodes, or do they just fork that network and move on to another network? Many of the developers at the time wanted them to roll back, but Vitalik and this other guy decided that they were going to fork the network and move on to Ethereum. So Ethereum Classic was the original chain, but once that attack happened, they decided that we're going to dump the original chain and just move to a clean chain where the hackers will not have any impact, because the feeling there was that since the hackers still had the 3.6 million Ethereum Classic, they could do anything with it, and it could spoil the tokenomics of that particular token or flood the market at their will. So they decided that they were just going to leave it and go on to Ethereum. So Ethereum Classic still has its appeal as being the original Ethereum blockchain, but that part is a dark shadow that's hanging over Ethereum Classic. I don't have any investment in Ethereum Classic for that singular reason. So I would say invest at your own risk. It's going to go up in a bull run, naturally speaking, but it doesn't. I don't think it holds significant long-term value. And I'm not even sure how many developers will still be building on a network where the hackers have control one way or the other. And there are a lot of competitors for Ethereum already. So that's the story of Ethereum Classic and Ethereum. So whilst Ethereum Classic was the original chain, the founders, which is Vitalik, decided to abandon ship and move on to a new one because the hackers are taking advantage of that network. BitTorrent, I think it's a good token because it's like a P2P file sharing blockchain platform. You knew about BitTorrent, I think, in 2019. Yeah, I knew about it in 2019. Must have been 2019, around this time. Yeah. That was when I knew about BitTorrent. Good technology, good use case. I think I have some of it. It's done significantly well, but I think I bought it when it started mooning. It's come down now. Actually, I think it's a good buy. It's another good opportunity to buy now because it does have some significant use cases. And if you only needs to get picked up by one of the institutional investors, and then it starts to fly. So yeah, I think let me see the circulating supply. Yeah, 1 billion, not too bad. Not so bad. Yeah, not so bad. Still at some 5 billion market cap. Yeah, not so bad. So BitTorrent is a good one. GY. I think it's a good one. I already have some, but I think it's a good time to accumulate more because so sorry. I wanted to explain a phenomenon. When you see a parabola, which is what you have here, when you see the parabola go up and come down again and you have consolidation, it's usually a good time to buy here because it means that it might be gearing up to move up for another parabola. And we still have 1 to June, July, August, plus or minus October, November, December. We still have 4 to 8 months in this bull run left. So yeah, some upside to be expected for BTT. So I think I've answered all the questions. Yeah, I think I've answered all. Okay, I think I've answered all the questions. Let me see. Yeah, I wanted to discuss Rari, I think. Yeah, I wanted to show the fundamentals for Rari. So yes, I said I found about Rari here. Yeah, I think I found about Rari here. Yeah, I think yeah. It was yeah, I think it was around $2. Yeah, I found out about Rari around this point in September last year, and I remember complaining to you why that it was too expensive. Anyways, it's apart from being a DeFi token, it's also an NFT cent token now. And NFT is going crazy, so I think it's a good buy. It doesn't have too much supply. It has about 25 million. Current market cap 67 million. So do the maths. It has significant at the minimum. I think it can do very easily to 200 from where we are, which is not bad. Yeah, currently sitting below 20, so 200 from where we are is 10x. So if you are thinking about it, good one to buy. It's now on crypto.com from what I see. So that's all from me. If there are no other questions, I'm happy to let you enjoy the rest of the Friday. For the guys in US, okay. For the guys in US, please remember that the training session for trading behind, investing behind the firewalls is on the 29th of May. And what I'm going to tell you is how you can sidestep the technical hurdles that are involved in being able to invest from inside US into many of these DM cryptocurrencies. So if you're interested, get in touch with me and I'll tell you it costs $120. So if you're interested, get in touch with me. For the crypto portfolio management class, I'm going to take that next week, Saturday. If you are thinking of doing this long term, I think this might be a good class for you because it's going to help you in structuring your portfolio and in managing your portfolio. So those are things in terms of things to come. Then from the second half of the year, most likely from June, we're launching our Patreon platform. I will keep you abreast of it when we start. We're launching our Patreon platform for all sorts of product signals, market insight, buy and sell alerts and all that. But I'll keep you in the loop for that. I have a question saying, do I still believe that Doge will pump? Well, Doge is going to pump tonight because Elon Musk is on Saturday. Oh, tomorrow night, sorry. Because Elon Musk is on Saturday night, from what I understand. So usually when Musk is talking about Doge is pumping any day, anytime. But having said that, let's not get ahead of ourselves. Where is Doge again? Yeah. So Doge has been since the beginning of the month. Okay, well, it's been sitting at 67 cents. Now it's 62 cents. All the English I was saying is that only invest money you can afford to lose in Doge. If you really, really want to invest in Doge, then wait for the market to pull back. That's the explanation I was trying to give with this chart. Where is that chart? That's the explanation I was trying to give with this chart. That when the market went from the peak here to the bottom here, it was a 65% drop. If you see a 65% drop like that, you can buy Doge. Well, not a financial advice. And if it's not at the end of the bull run, but I mean, at the end of the bull run, you can have a 99.9% drop. But if Bitcoin has not done 300K and you see that kind of drop in Dogecoin, yeah, you might, put some bet money. Like they say, money you can afford to lose for speculative purposes. And then, when it goes back up, you can take your profit. But right now, I think it's overheated. I think you should stay. Yeah, if you're talking about asking whether I should stay clear, you should stay clear for now. It can still get to what I'm saying is if it gets back to 68 and it doesn't break 68, which it doesn't look like, then it might plunge down to somewhere around 25. So if it plunges down to 25, yeah, $100 or $200 will not feel. I mean, depending on your financial situation, might be a good speculative. But I mean, there are other coins that you can buy that are not just going to give you better returns, but they're also, they have value. So depending on if you are a very high risk taker, yeah, all the best. What's my view on SafeMoon? Okay, I'll tell you my view on SafeMoon. Let's go to SafeMoon for the benefit of those who don't know what we're talking about. So there's been a number of projects that have been coming into the markets with the word safe. So if you type in safe now, you see all sorts of safe, SafeMoon, save everything. But they've been coming in largely through decentralized finance. And what that means is that they're not sitting on any exchange. And as a result of that, there is no overview or anything. And the price is really driven by the liquidity providing on the DeFi platforms. So SafePal was the first one that came up with. So SafePal is a DeFi application. It has an app that you can download on your phone that helps you, that functions as both a wallet and a DeFi platform. So from their DeFi platform, you can buy all sorts of tokens. Now, SafeMoon is one of those tokens that is peculiar to the Binance Smart Chain, as you can see here. So, like many of the projects in the same category, there are projects that have been aided by the launch on Binance, because Binance already has clouds, or they already have the community. So when most of these projects launch, they're easy to get traction, because Binance already has a lot of cloud that they can push these products to. So the same thing with SafeMoon. I got into SafeMoon very late, I must say, but for the guys who got in early, I mean, they made decent 5x on their investments. It's a DeFi token, like I earlier said, and they're supposed to be used for acquisition and burn. But there are all sorts of DeFi projects that are coming up at this time. So if you want to invest in DeFi projects like SafeMoon, invest what you can afford to lose, because these are all new projects that are riding on the back of the bull run. We don't know what they're going to become once the bull run is over. So yeah, if you're going to invest in it, make sure it's money you don't have problem losing. I mean, there are constitutional risks that comes with trading DeFi and all that. That's notwithstanding, but just make sure that it's something that is not going to break your bank account or cause you sleepless nights. There are many of them. There's SafeMoon, SafeWall, Safe, all sorts of safes that have not even launched on exchanges, that are already being sold on the DeFi markets. So that's my opinion. I do have maybe like $100 or something on SafeMoon, but that's just my perspective to many of this stuff. So if I see them, or if I get told about them, I go into them. Yeah, I have a lot of. I mean, I've taken guys classes on DeFi in the last 3 months. I think, yeah, in the last 3 months, I think one classes on DeFi. So I do trade. I do hold assets that I bought through DeFi. My first Rarible tokens, I bought them through DeFi, MetaMask, on Uniswap rather, through MetaMask, I think. Yeah, my first Rarible tokens. So yeah, I do trade DeFi, but there are risks that comes with trading DeFi, and you need to be aware of those risks. Going in with your eyes wide open, essentially. Yeah, so I think I've answered everybody's questions. Anybody else before we call it a day?
Yeah, Doctor, good evening.
Mr. Albert, good evening. How are you?
I'm fine. What about you?
I'm all right, thank you.
There's this exchange that I don't know whether you know about that exchange. They also, I don't know whether it's it's like central exchange. It is called IDEX also, but you connect your wallet. You can connect your wallet to trade on it. It's just like central exchange, but all their coins, they trade on Ethereum blockchain, and you connect your wallet to trade on it. It looks
IDEX is a token and
central exchange. I don't know whether if you.
So I know IDEX. IDEX is a token and a decentralized exchange. I actually bought some IDEX. I was telling someone I bought some IDEX and I set the target price. I was somewhere in the roof. And then I woke up Sunday and found free BTC in my account, and I didn't remember that it was the IDEX that had gotten to the target and sold. So IDEX is a good decentralized exchange, but they also have their token that they sell on other centralized exchanges. So any exchange that requires you to connect your wallet.
Why is it different from the other this thing? But there is a quite different, because you can see everything. But the other decentralized, you don't see it. You only just connect your wallet to it, and but this one, you can see price movements, everything, buy, sell, and all those things. So
Yeah, okay.
that's what make me.
Okay. Um, as I was explaining to the guys that I took DeFi class about a few months ago, the DeFi architecture is such that it can either be core DeFi, meaning everything that is related to that particular platform is entirely DeFi, or usually you have an hybrid. For most of the DeFi platform, it's actually an hybrid. What do I mean? If you log on to Uniswap, Uniswap.io, or Exchange or Uniswap, what you see is that the rendering of that Uniswap page is actually from their own private server. The contract data, they fetch it from CoinGecko, or they fetch it usually from CoinGecko. Then the blockchain data for liquidity provision, they're getting it from the blockchain. So if you look at that architecture on the paper, you see that even though it's DeFi, it's actually more like a hybrid DeFi, because the only thing that they are doing on the blockchain is the actual transaction. Most of the data that are recurrent data, like dates, time, and all that stuff, is sitting on their own server, or what I call master data that they use is sitting on their own server. But the transactional data is sitting on the blockchain, and then anytime you need to execute a transaction, that's why it asks you to connect to the blockchain, or it asks you to approve from your wallet, because that is the time that the transaction is being committed to the blockchain. So IDEX is just like, there's another one called the YDX that actually has margin trading. But for you to do margin trading, you also need to connect from your wallet and move the money temporarily to their own wallet before you can do margin trading. So it's still DeFi. It's just that it's
that you can, if you can sign up there with your email.
Yeah.
But the other the other DEXs is not like that.
Yeah. It's they have different flavors. So there's some like that. There's some that just pure DEXs.
Then this one look more comfortable, because this one, I think you can chat their support, but the other DEXs, I don't know whether you can chat support for.
No, you can't.
Oh, okay. All right. Thank you. I know. Thank you for the explanation.
Yes. So you had your hand up.
Hello. Thank you, Doctor. A friend of mine told me about DeFi for you, and I just want to know what your thought is on that, and also Freecoin.
Okay. So DeFi is how do I explain DeFi? DeFi is the next generation cryptocurrency technology. That's the simplest way I think I can put it. So when this whole era started, it started with Bitcoin. Now, blockchain technology as a technology itself, which is distributed computing, has already been happening since I think the 90s. But using it for transfer of value was what Bitcoin first achieved for everybody. Now, on the back of Bitcoin, when people saw what was possible with Bitcoin, people started creating other tokens, which we call altcoins, one of which is Ethereum. Now, when people saw that Ethereum was so successful in that instead of now moving value on the blockchain, you can actually move computer codes, then people started creating their own platforms. And as a result of creating platforms on the blockchain, we now have what you call decentralized finance, meaning the activities and the services that the financial industry would otherwise have provided are now being rendered on the blockchain without the need of a middleman, or without the need to have trust, or what you call trustless transactions. What does that mean? Ordinarily, if you wanted to open a bank account and you live in Nigeria or Zimbabwe, and you want to open a bank account in Switzerland or in UK or in New York, you are likely not going to be able to do that, because you're going to need to do KYC. You're going to need to do proof of address. You're going to need to go through a lot of hurdles before you can have access to banking services. But what this technology is doing is giving access of banking services regardless of where you are, as long as you have internet. That is the core philosophy of DeFi. The finance industry, they have an idea of what is coming for them, but they don't know the full impact of what is coming for them. It's literally
Yeah,
going to blow off the entire finance industry because
absolutely.
if you don't need a middleman to provide banking services for you, so what's the use of the
Mm,
bank? So already in the DeFi ecosystem, you already have lending, you already have borrowing, you already have liquidity provision in which you can earn interest, like
mm,
fixed deposit arrangements. You already have all sorts, including betting, insurance, as in all sorts of things are already happening in DeFi as we
mm,
speak. So it's a huge new step. Now, NFT
mm,
is another step upon DeFi, which is probably going to create more confusion for the financial systems as well, because
mm.
they are still trying to grapple with blockchain and DeFi. Then you're now saying NFT, but basically DeFi is putting finance on the blockchain, and it's going to wipe out the entire industry. It's just a matter of time.
Okay.
Um, free coin is free coin. It used to be free, but it's no longer free. It's no longer free anymore now that it has market cap of like 7 million. Um, Again, speculative assets driven by hype.
Mm,
Um, General principle: when you see a spike up, you don't touch it when you see a spike up. When it's coming down, like where it is now, yeah, you might
mm.
buy a few and wait
Okay.
to see if it's gonna go back up. But it's purely speculative assets. Really, you see, where is that stuff? Yeah, no formal central management team. You see how they can do. Yeah, it's just Telegram. It's just it's another for fun coin.
Okay.
So yeah, make your decisions accordingly.
Okay. Thank you so much.
Problem. You're welcome. Somebody says, "What's my view about EOS? Can you FOMO?" Okay. If you know what FOMO is, then don't ask me whether you can FOMO. If you already know what FOMO is, then there's no need to ask me whether you can FOMO. EOS was a very strong coin back in 2017. Historically, I think it went as high as $20 in 2017. Um, it was a good project. It's a very, very good project in 2017. And because they were also planning to be like Ethereum in 2017, they had a lot of traction. I've not seen so much heat from them as a team. I mean, I don't follow them, but I've not seen them in the news. Neither have I here. Heard of um, guys building stuff on them. They didn't launch their blockchain until 2018. I've not seen anybody building dApps on EOS. So the clout they have right now, what's the number now? They used to be around top 10. Now they're down to 22. The cloud they had was because they were early and they were like Ethereum competitors. But guys, there are stronger guys in the fray now. You had BNB sitting strongly. You have Cardano, you have Polkadot, you have Solana. I don't think they have a chance. However, I think just looking at this chart, I think there is still a remote possibility that EOS will go back to $20 before crashing. So yes, if you want my opinion, you can FOMO in. I wouldn't FOMO in, but if you want my opinion, you can FOMO in. But there are way too many other cons for me to consider than staying with EOS. I believe that answers your question. Okay. Any other question? I think we've exhausted our time now. In the absence of no other questions, thank you everyone. See you again next week. Have yourself a lovely weekend. Bye bye. I need to shut down Instagram.
Bye bye. Bye bye. Thank you very much.
All right.
Thanks, Dr. Demi. Came in late, but I got good